This program has been made possible by Weatherby Asset Management. The views and opinions expressed are those of the guest.
Welcome to this edition of Wealth Psychology at Sylvia Global Media. I'm Emily Bouchard, one of the hosts of this Wealth Psychology show, and I'm managing partner of WealthLegacyGroup.net. And we are totally passionate about whatever we can do to support people in living truly rich lives, and where the money and wealth in your life becomes a resource and a tool that supports you in living from your passion and purpose. So today we are here to educate women especially about the whole field of investing. We're going to introduce the topic, we're going to talk about what it means for women, how it's different for women than men, and also we're going to get to meet a really phenomenal woman that we've decided to team up with to do a really great educational component of our work around supporting and empowering women around investing and clearing away the emotional side that keeps us from feeling more empowered around investing. And this is Maria Stark, and she is the founder of Emerge, which is an organization that supports women in running for office and getting elected. And she learned a lot about all that was involved in that and empowering women to stand up in the world for what really matters to them. And just phenomenal work there, and empowering them to be public speakers, to be fundraisers. And I guess Maria also saw the need for tapping back into her original passion around investing and for women and empowering women around money, and that's her new love and what she's focusing on now. So welcome, Maria. Loving the fact that you can be on the show and that we get to work with you. So tell us a little bit about your passion for women and investing and how you've shifted gears.
Well, thank you so much, Emily, for having me. It's a delight to be with you. You know, I'm one of those people that would get their brokerage statements and just chuck them in my box. And there was really no good excuse for it, because I majored in finance undergraduate school at Berkeley, and I went straight to Wall Street and worked in corporate finance for many years. Worked in Europe in mergers and acquisitions, and you know, immediately when I got engaged, I turned over my finances to my fiance, who was a lawyer. And so, I mean, it's so strange, right? And so over time, over the past few years, I've been reflecting on, you know, my own bizarre behavior of being so experienced in finance. I also have a master's in statistics, of all things. And yet I turned over the money to a guy who had no background whatsoever. Lovely man, but like, why? And so I think there's a tendency for women to sort of offload certain, what feels like administrative tasks. And also, I think the finance world has been sort of off-putting to women. Trust me, working on Wall Street, I know all about that.
Oh yeah, I can just imagine a nice young undergrad, freshly out of college or your master's, and going onto Wall Street. Yeah, I bet you learned a lot about that.
Yeah, it was kind of came as a surprise. It was a bit naive, but in any case. And so I've dug back into finance over the past few years. It's just like politics. It's an enormously important area of our world that women are a little bit too absent from, and I think it's just time for messages that are designed for women to really engage them and bring them back into the world of investing in a more engaged, exciting way. And part of, I think, the solution is sort of I think there's a lot of really negative stereotypes about women. So even some of the women writers talk about women being incompetent and being spendaholics. And the problem with that is that it's simply untrue. And one thing I really want women to understand is that, on average, women are in fact better investors than men. They earn 1% more per year than men do. And
that is no small amount. I want to really highlight that, because oftentimes we can hear 1% and think, oh, that's not that big of a difference. And I want to just slow down for a minute, because if you're serious, and women on average do better at investing to the tune of 1% a year, that's 1% of a lot of money. And that really says something. That's significant, isn't it?
It's actually an enormous difference. You're right, it does sound like something small. But if you think about all the investment managers out there that would kill to have a 1% improvement over the benchmark in their performance, you would see that it's actually a really important number.
Yeah.
To consistently outperform by 1% is something basically every mutual fund would die to do. And yet women are doing that categorically, well, on average, across this country. And so, yes, you're right. Thank you for pointing it out, because it's a big difference, and it's something that we're unaware of. And the culture still speaks to women as if they're frivolous and that they're not good investors. And the reality is they actually have certain advantages. And it's not to say that women are like better securities, they pick stocks better than men. It's more that both men and women make mistakes, but women make fewer mistakes. And that's key.
That's a really good point, and I like what you're saying, because this whole conversation is about how to empower women in getting involved in investing more, feeling more competent and confident in investing. And while you're saying that on average women tend to outperform men in their investing, I also wonder, has anything been looked at in terms of the number of women that invest compared to men? Do you know anything about that? Are there significantly fewer women? Is it about the same amount?
Well, I think that's hard to say, because obviously a lot of families are couples, and so I actually don't know what the data is in terms of how the sort of responsibility is allocated. Certainly, plenty of couples will defer to the man. And I think partly that's a cultural thing, not so much.
Yeah, definitely. And in different cultures, it's even more. There might not even be a choice around it. I mean, I love that you started off with such a personal story, and it says so much about you. And it's one of the reasons why we love the idea of, putting on this educational, webinar that we're doing on women and investing and decoding the whole secret of it for women, because you come at it from a grounded educational background. You come at it from experience directly in the investing world. You understand that marketplace, the field inside and out. You understand the language of numbers and money. And yet when you fell in love and you had a wonderful fiance and you got married, it was, I'm deferring to the man in my life. That man is my plan. And it doesn't really play out in the long run, especially when you look at the amount of divorce that happens and also the number of women that outlive the men in their lives. And whatever we can do to support women. Yeah.
Yeah. Well, and also realizing, like, when I really started taking a closer look at this stuff, that I was in all these, like, horrific high front load mutual funds, and I mean, it was a wreck when I saw it. And so I would I think first it's about encouraging people to realize it's actually not that complicated. I actually just saw this wonderful piece called "Everything I Need to Know About Personal Finance" Fits on an index card, and and I like to teach people some of the basics of index card investing.
Oh, that's great. Instead of looking at an index fund, we're going to look at an index card. I like it.
I do like the connection to index funds, because particularly for most people, index funds actually are a great way to go.
Oh, okay. And can we just slow down in terms of jargon? Because, we step into the language of investing, and I want to slow us down because for many women, just saying index fund glaze over. And it's not that women, that women are stupid. It's not that women don't understand it. It's a jargon. It's a language. And it's something that we tend to, when we hear it, we can check out. And I want to be clear that there's a lot of women that understand this like you do, back of their hand. And one of the purposes of this show is to make it so that I get to ask the questions that maybe some women would like to ask but are not feeling confident enough to ask or don't want to look foolish. And there's a lot of women I know that we work with that are inheritors, or maybe they've just gone through a divorce and they have index funds and they actually don't really even know what that is. So could you just explain for a minute what an index fund is and why it's a good idea?
Okay, so this kind of gets into some of the really basic concepts of investing.
Yes.
And one of them is diversification, and a second really important factor is keeping fees low. Yeah. And so an index fund essentially is mimicking an index, very often the S&P 500 index, and so you're able to get a lot of diversification. You're essentially investing in the totality of that market.
Okay,
And
now you understand everything that you just said, and I just want to slow it down. So first of all, diversification
yeah,
means having your investments in more than just one thing, and not just one asset class, not just one particular way of investing, right? Is that diversification and what you mean?
well, so remember what your grandmother said, and that was to not put all your eggs in one basket. So don't just buy one stock. And so it's how do I invest in a whole bunch of things? Because if I invest in only one or two or three things, the probability that those will be the best choices is not really that high. And so what you want to do is spread out your investments across a lot of companies, and you'll increase the probability that you'll have great performance. And so that's the notion of diversification is kind of not having a concentrated investment position. So, and then, but asset classes is the types of investments. So there's large stocks, big companies, household names. So if you've heard of it, that's likely to be what's called a large cap stock. And then there's bonds, and there are other types of assets. And ultimately, you want to have representations of each of these categories of assets so that you have basically sort of diversification across and within each asset group.
Right. And what I love about what we're doing now is we're just opening up the conversation. We're like peeling away the first layer of the whole conversation around investing. And even as we start to speak about it, it's a lot of language, a lot of different concepts that once you grasp them and you understand them really well, and there's lots of ways and examples and graphics that we can use that will show you what these different things mean. It then becomes as simple as being able to look at an index card, and it's not so overwhelming or difficult or confusing. What does get confusing is when an advisor is right in front of you and they start using term after term after term that you don't understand, and also when you don't understand how exactly they're getting paid for what they do. And so that you said the other thing that you need to be aware of is fees and keeping fees low. Can you speak a little bit about that?
Well, fees are a really, how should we say, a difficult, thorny area of investing. And so there's different ways that financial companies make money. One of them can be that they charge a % of your assets that they're managing. And in addition, depending on what investments you're in, say a mutual fund or a bond fund, they can also be earning money based on the actual investments that they put you in, what's called inducements or kickbacks or commissions. And so it's, I would say this is one of the areas where it's really challenging to get a straight, full story, and one that I think is very off-putting to women. And because we, as women, we really do want to know what is, we want transparency, we want straightforward language, and to trust that this person knows what they're doing and is investing on our behalf and not on what essentially gets them the most money.
Yeah, it's one of the things that's really interesting. I have a client that's an inheritor that I actually asked Maria to consult with a little bit because I was a little bit concerned about some of the advice she was getting from where she had some of her investments. And it was really interesting because she actually became confident enough to start looking and asking, and her money was with a bank, and the bank really encouraged her to take out a loan to buy out her brother in some property that she inherited and he owned, that they inherited together. He wanted cash and she didn't need it. She had the cash to do it, but the bank really encouraged her to take out a loan. And I questioned that a little bit and asked her to look into it a little bit more and do some research and find out, how much interest was she going to make on the money that was going to be kept in that account that she would have taken out versus how much interest she's going to have to pay on that loan over how many years they've decided to do it, just to get some numbers. And she went back and they did some research and they explained and they justified why it was such a good idea. And then later on they told her that it was probably really smart for her to pay off the loan all at once. And then it was very confusing because there were fees incurred in getting the loan and then some of the interest and then paying it off. And there was some question about whether there was some incentivizing going on in the bank around the number of loans that they needed to do that month or something like that. And so it was a really interesting exploration, and I loved the way that we could work together to empower her to be able to ask the questions and really get some solid answers from her advisors to let them know that they really can't be taking advantage of her in that way. And I'm wondering if do you encounter that? How do you support women in understanding how to move with their advisors so that they don't feel like they can be taken advantage of and that they really have an understanding when they're being advised to do something of how it benefits them and also how it benefits or not their advisor?
Well, it's really about understanding the investments well enough to ask good questions, and just being comfortable, getting comfortable with asking really straight questions. And oftentimes there's going to be some resistance that the advisor will have in explaining it. But that's a really important signal. If there's resistance to explaining how things are charged, I think that's a red flag. And it's possible that that person needs to consider working with somebody that's more independent.
Yeah, and you've been working with women a lot, empowering them in politics. You had an angel investment fund that you started. Can you talk a little bit about your passion in terms of women in finance and women in investing? Tell me a little bit more about that.
Well, women control a lot of assets in this country, and I think that every person has an obligation to themselves and to those they care about to manage their money in a way that is most appropriate for their risk level and for their needs. And I just think that the finance world is incredibly opaque and I would say patronizing towards not just women, towards everyone, but women in particular. and so it's like how can we get a little more aware and find ways to become more engaged and more curious and more interested in this material so that we are getting a good deal or whatever you want to call it for yourself.
Yeah. So you're making wise decisions so that you know that what you're doing really is it's being smart, it's being sound. You're feeling like, wow, I'm not just making a knee-jerk decision because of an emotion or because I'm too ignorant on my own part, so I need to trust somebody completely. It's more about, well, how do I interface well with my advisors so that I'm learning along with them, I understand it, I am not overwhelmed by the topic. That's the main thing I see. That's what you have to offer.
And on a macro level, I think it's also really important for women to feel engaged with their money because women live longer than men, they earn less than men, they provide a lot more care, foregone wages, on average $325,000 over a lifetime than men. And so it's even more crucial and critical for women to do a good job with the assets that they have to take care of themselves and their family and themselves in retirement.
Yeah, and I want to speak a little bit about that there's different things that get in the way of women taking care of ourselves. And you spoke about that right at the very beginning. It's really amazing that you have this ability, you have this competence, and when it came to, being in a loving marriage, there was a way in which we can often default to the man in our life taking care of us. And there's another piece to that, which is we may get signals, subtle or not so subtle, to not ask or inquire or show up as competent around it. That there's something about the man in our life and his identity around this, is that's his role. And oftentimes if a woman comes forward interested or engaged, there can be some pushback a little bit in terms of don't question me and don't you trust me. And that's the energetic that can happen between a couple. And one of the pieces that in terms of the work that we do around investing together in educating women so they can feel competent and confident is also how to have these conversations with the men in their lives, with the women that are the partners in their lives, with the advisors that they work with, in terms of it's okay for me to be interested. I'm not questioning you. I'm wanting to know just in case something happens to you, I'm not in the dark. And I know I'm taken care of. I'd like to know how I'm taken care of. And I love that you're taking care of me, and I want to know how that looks. And those kinds of ways in which you can be more a we in a partnership going forward, and then not so in the dark, and feeling okay about opening up those statements when they come in, like you said, and wow, I understand what these numbers mean, and I understand what it means when they go up or down, and I don't have to be worried about it. That's the thing that I see is so important about what you're offering.
Well, and I see it very similar to like how I feel about taking my car to a mechanic. That as I'm a woman, I have a higher hurdle in terms of being given a fair shake on what's happening with my car, and so there's a way in which you want to cart a man along with you to give you credibility or to reduce the likelihood that someone's going to try to take advantage of you. And I think that goes a long way towards explaining why sometimes women defer to the men in their life is just who wants to deal with that. And so that's one thing I'd like to see change in the culture is a better understanding that certainly women are more than competent to deal with these finances, but sometimes if you could just remove the ick factor from what the financial advisor is doing, you'd go a long way to solving some of these problems.
Yeah, and what I like is that there's also going to be a lot of empowerment in terms of, I'm so excited about your book. I know Maria's in the midst of writing a book to really educate and empower women about decoding these secrets of investing to make it so that people can be empowered and simplifying it in a way where anybody can read it and understand it. I mean, we were doing some research together, and we were looking at a number of books that were written about investing. And first of all, one book was saying invest this way, and then another book was saying that's the worst way to invest, and you want to invest this way. And it's more about, wow, how do you navigate this when there's these experts that are telling us to go in diametrically opposed ways of approaching investing? And that's one key that is really essential. And then making it so that I would pick up a book and I'd say, oh, no, none of my clients would ever read this book. There's no way. It's like way thick and filled with really tiny print and lots of detail, and it's like, oh, we're not in it to become the most professional, savvy investor that's paid to invest people's money. We're in it to understand enough about it that we can interface really well with the people that invest our money, or if we are going to do it ourselves, we can trust that we're making really sound, smart decisions without having to go into, getting a degree in it. So, I mean, that's what I see that you're up to, big time.
Definitely, yes. There's a way to strip out some of the complexity and take a more straightforward approach, and really demand that, because it doesn't have to be that complicated.
Yes. And do you have any hot top tip for us as we get ready to close? And thank you so much for being here. I want to know how you want to support all of us in being empowered around our investing, and what's like one step that we can take right away to become smarter about how we go about investing, that we might open up those brokerage statements and actually have a conversation with our broker?
Well, I would say that it's really making sure you have proper diversification. That's probably the most important thing to look at. That you have good asset allocation and diversification.
Okay, so if for somebody who really wants to take this hot tip, I want to just narrow it down a little bit. Okay, if I have good diversification, what do I have?
Well, honestly, that is a little bit a complicated question. So it just depends on a bunch of factors. So that's not a kind of, you know.
No, I want it I want it on that index card, Maria. Exactly. There is some complexity to investing. There are some details we need to understand. The core issue is when you know your level of risk you want to take, when you look at how old you are and how much time you have for your investments, there's some qualities in clarifying information that's going to really help make sound decisions in terms of how much you want to be diversified and in what asset classes, right? In terms of, what were you saying, like the large caps and small caps and bonds? Those were the ones I heard you say earlier. Some people are really interested in having some of their money in real estate or in cash, and like how much you want to have in those different things really matters.
It matters greatly. That is ultimately having the right percent in each of these categories based on your risk level, your cash needs, your future savings rates, all these different factors. That's really important. Having a set amount that works for you, and then making sure that every quarter you get back to what's called rebalancing, that you keep those percentages the same over time. And that's the way that you have a sort of disciplined approach to investing over the long term. And of course, for anything that's in the near term, that should be in cash.
I love what you're saying, and what's so great about what you're saying is once anybody, woman, man, anybody, gets clear on what works for them and they come up with their different allocations, then it does become a bit like a game. You get to really have fun opening up your statements. You get to look and see, oh, what's gone up? What's gone down? Where do I need to reallocate my funds? What do I need to be paying attention to? And then it's not stressful, it's not overwhelming, and it doesn't create a lot of anxiety. It's more like, oh, I understand how to play this game well.
Right.
Great. And I would think the other hot tip that we're going to be definitely exploring more is how to understand those fees and making sure that, you know, whatever you're invested in, you understand what that's costing you as well, not just what it's making you.
Absolutely. These are really critical to long-term success in investing.
Yay. Well, Maria Stark, welcome, and thank you so much for coming and joining us on this edition of Wealth Psychology. So looking forward to talking to you more in depth about the different chapters of your book, the different areas that you're going to be exploring in terms of women and investing in particular, and learning with you and along with you. I'm excited. I've been wanting to get empowered about my investing for a long time, and I feel like, yay, I've got my resource. And we're also going to talk about, you know, what is it that keeps people from feeling like they can go forward with this. And if you've been paying attention to this show and you've found that you've had some anxiety come up during it, or some overwhelm, or some excitement, be aware of those emotions. We're going to talk more about how to move with those emotions and breathe through them so that they don't necessarily take you in the wrong direction too quickly or derail you and keep you from moving forward at all. So thanks for tuning in, and more to come with Maria Stark, and we're going to be talking about women in investing on many different levels. Have a great day.
Weatherby Asset Management is dedicated to providing exceptional wealth management services by forming partnerships built on trust, understanding, and thoughtful advice. For more than 20 years, they've been offering objective perspective, personalized planning, and sophisticated investment management to individual investors and families, as well as pension plans, foundations, and endowments. Contact them at www.weatherby.com. Weatherby Asset Management, located in San Francisco and New York City.